Hello everyone, welcome back to my channel. So this video marks the end of week number 37 in this road to 100k realized return challenge, and this has been again a week of ups and downs all the way through, a lot of volatility in the market, but then the event that took place on Wednesday caused us to have a major loss, and making very quick calculations about it, we lost something around $9,000 in total. And I'm going to explain the sequence of events that took place and to led to this loss. But now, as you can see here, and this is the activity statement, considering, let me just zoom out a little bit here, and here it's from April the 3rd 2024 to April the 3rd 2025. So this is 1 year, a full year. And here we have still our gains that accrued over the year, but then we have here from April the 4th to April 11th, and this will include this the past Wednesday, as you can see, and now we have a loss to contend with of around $7,700. Of course, this is offsetting some of the winnings that we accrued over these days, but the loss of this particular day amounts to about $9,200 and change, give or take. And so basically what happened was that we did what we usually do. Keep in mind that the QQQ, which, as you know, tracks the Nasdaq, was trading at around, and let me just pull back the graph here. So this is the 1 day graph, and so let's pull it back here to the number 9. Yeah, so here this is by around the time we placed our bet, and basically we sold calls with a strike price of let me just here duplicate the tab for you to see. All right, now let me just bring this out. All right, cool, now it should work. So basically we placed our bets, or basically we sold our calls with a strike price of 435, which was basically, and making the quick calculation here, here are the ones, yeah, here, not yet, yeah, here, the ones that we sold at pretty good premium, and still this strike price amounted for a 5% increase in the Nasdaq, or in the QQQ. What does that mean? That means that the option would expire worthless even if the QQQ had an increase of below 5%, around 5%, give or take. And things were going fine. Of course, the options were losing value because the price hovered around 400. It rose a little bit since we put our bets. We sold our calls, but stayed at around 420 something and change. But then, because I could not stay looking at the screen all the time, there was a period of time in which I could not stay in front of the screen, and I had to go off the broker, the interface of the broker. And so basically what happened was, when I came back, I got a message on one of my feeds that US President Donald Trump announced a pause in the tariffs of 90 days. And as a result, immediately I suspected that the markets were going up. But when I came back, apparently the stock market, both the S&P 500 and the Nasdaq, were around 10% up. And so as a result, our calls were massively in the money, and they were super expensive. And because of that, and considering the fact that we bought the shares of QQQ at 535, if you recall that, we were facing, because the strike price of these calls were 435, basically we're facing a $100 per share, a loss per share, meaning since we have 300 shares, we were facing a loss of $30,000. And so, of course, this is what would happen if we didn't do anything and we let the options expire in the money. We would sell the stock at 435 and have that loss. But then I realized that, of course, I could not let that happen because that would be a massive loss. And so basically what we've done, since we had also here with Pfizer, we had sold a put because we had the money to do that. We had sold a put with a strike price of 21, and we had the 30 contracts, the 30 calls on Pfizer that we sold on Pfizer. Basically, what we did was buy back this call, even though we had to do it. As you can see here, we had to realize a small loss. We had to buy back our calls on Pfizer. What is the purpose of this? To release the collateral, because the shares of Pfizer were being used as collateral for this call. So in order for me to sell some shares of Pfizer, I needed to sell some contracts buy back some Pfizer calls. I ended up buying back all of them. Probably I should not have done so, but at the time, I was not even thinking clearly at the moment because I was so surprised by what was happening, and I had to move it quickly before the market closed, because this was, when I came back, it was very much the end of the day. And so once we did this, we had enough money on hand, especially because we bought back the put, and so we had collateral available to buy back one of the calls on QQQ. We bought the first one at 26.7, so keep in mind we sold at 135, we bought back at 26.7. These were calls which were massively in the money. And here I think these are the prices. We bought back one at 26.70, and then I calculated, all right, to buy back the remaining two calls, because the price of the QQQ continued to rise. The stock eventually ended up going up around 12%, and so I realized that, all right, at the price that Pfizer is trading, we are going to realize a loss on Pfizer, and we bought back the two remaining call options at 27 each. And so this was basically a $9,200 loss. But then, of course, we kept the shares, but we had to realize this loss on the Pfizer shares. As a result of this, now, because in order for us to break even on the QQQ shares, and keeping into account this loss on the calls that I bought back from QQQ, we would now have to sell the shares of QQQ at 551, give or take, just to break even, and considering all the premiums that we already received so far. So just for you to see the magnitude of the loss. And now we sold those shares because we are using FIFO, first in, first out. The 260 shares that we sold on Pfizer are these ones, the ones that we bought at 28.5. The selling price was 22.35. So in order for us to break even, including accounting for this loss, we would have to sell the remaining 2,740 shares at 26.57. Of course, this does not account the premiums. This is just on the capital. So if we sell at this price, we would still keep the premiums as a profit, all the premiums as a profit. Now, as things stands at the moment, of course, because I don't think that this was normal, because I saw the news then afterwards, this increase in stock in the Nasdaq and the S&P 500. For the Nasdaq, it was the second largest increase ever, I believe, and the largest since 2001, I believe. And the as for the S&P 500, this was the third largest increase in the index for one day, of course, since the Second World War, which ended 80 years ago. So just for you to have an idea of the magnitude of the increase in the price. But of course, I felt this was completely unpredictable, because no index usually rises more than 5%, and this was the threshold for us to keep everything going fine. But of course, 12% increase is far more than we could ever predicted. uh, I searched the news, and apparently there are some calls for an investigation into insider trading over the actions of U.S. President Donald Trump, and simply the reason is because on that same day, as you can see here by the header, well-timed options trades against Trump's tariff pause draw questions, because apparently on that particular day, U.S. President Donald Trump posted at 9:37 a.m., so at the beginning of the day, and when the market has just started this trading session, he told apparently this is a great time to buy on his Truth Social account on the social media platform Truth Social. And then later in the day, he discloses that he will pause the tariffs for 90 days. Now, there are a lot of calls, especially as you can see here from Senate Democrats. They are asking the SEC to probe these actions and to see if there is potential market manipulation, because if you are a person in power, you will announce to the market now is a great time to buy, and then because you are in control of the entire situation, you have a lot of power over the market. So if you do this, you have the power to sway the market in a way that benefits you. And so given the fact that there was a lot of activity in the options market as well, this probably something was amiss, probably was not. But one for me, I cannot make any accusations because I don't have any proof, but for me one thing is absolutely clear, and the thing is that when someone, being a US president, being another person with a great deal of power over the market, for example the SEC, the Securities and Exchange Commission president, or the Federal Reserve President Jerome Powell, because these people have a lot of sway over the market. Anything they say, anything they do, have a repercussion in the market. I don't think that it's appropriate for any of these people saying that now is a great time to buy on social media or whatever platform it is. I can do it myself because whatever I say does not have any effect on the market. But when someone with a great deal of power do this, I think questions must be asked why this person is doing it, because the person is aware that everything that he says is going to have a big effect on the market. Now the reason is why the person is doing that, what the person has to profit from that, and basically what could be the purpose of this, because I don't see why someone a person who has a duty to keep the interests of the country and the interests of the integrity of the stock market like anyone else in his best interest. He must keep his best interests of the integrity of the stock market, and any attempt to manipulate should be condemned. I don't think that anyone in his right frame of mind with such power over the market should make this kind of post or declaration or whatever it may be. But this is just my opinion. Anyone can say this is sour grapes, or a loser mentality, or a loser, yeah, whatever. But yeah, we don't see this kind of behavior from anyone else, and so I think this is a sign that, yeah, uh, something could have happened, but we need to have we have to be very careful. And now at this moment, we'll continue to do the same, to have the same approach, to set up our calls in a way that should be safe, even in the face of a large appreciation of the stock market. But of course, we cannot account for 10% increases, 9% increases, 8% increases, 11% increases, because the option chain sometimes does not go that far, and sometimes, even if it does, the premiums are not profitable at all. So we cannot allow this situation to encumber our strategy, and so we will continue to pursue it in a way that accounts for most, if not all, of the normal outcomes. And that's all the best that we can do moving forward. And the way we are going to proceed to recoup these losses, because I have no doubt that we will recoup those losses, is basically we are going to try, first and foremost, to with any further cash that we may get, we will buy more shares of Pfizer to lower the strike price, and eventually breaking even, selling the entire lot of shares at breaking even at least, and then with those proceeds buying additional QQQ shares to make sure, if of course the shares continue to fluctuate around this price, which is far below the price at which we bought these 300 shares, but we will continue to buy additional shares of QQQ to lower the price, so that then we can move out of this trade, of course, at least breaking even. This is our best course of action, and so I hope that this strategy will continue without any further undue interference from important actors, whatever agenda they may have, but for sure without this kind of interference. And so far, yeah, this is it. Leave your comments below. Let me know what you think of this. This has been a very, very important development for the market. Of course, a loss is always sobering, but in terms of lessons learned, probably the next time, if I stay for a long time out of the screen, under this difficult market environment, probably either I will put some stop loss, or I will hedge the position with another. Well, I could use another strategy. I could use a calls credit spreads, because by buying a call further out of the money, at least we would protect against these large swings. But this is not we are using the wheel strategy for this challenge, and so the next time I will probably use some stop losses, and then we'll see what happens. But for the time being, yeah, leave your comments below. Also, feel free to DM me on LinkedIn if you have any questions, and of course, feel free to like the video and subscribe to the channel. We will reconvene next Monday to start the week number 38 in this challenge, and I'll see you there.